Welcome, everyone. You're listening to Big Sky Capital podcast, where we speak with big sky thinkers in the world of venture capital and startups. My name is Dimash, I'm the host, and our guest for today is Peter Findley. He is the partner at Bangladesh, Anchorless Bangladesh Fund. Hi, Peter.
Hello, thanks for having me on.
We met with Peter on the one of the events called Central Asia Venture Forum, where Peter was the speaker on the panel session on the AI, the hype around AI, and how to invest in AI startups. Um, First of all, Peter, tell us a bit about yourself, where your journey begins, your personal background.
Yes, thank you. So I graduated from Columbia a while back at this stage with a degree in math, philosophy, and economics. And I started off actually, I guess, the conventional finance path. I worked at D.E. Shaw, which was a quantitative hedge fund. Then I went to the sell side and worked at a variety of places, including now, I guess, fatefully I was basically head of dollar swaps at Credit Suisse, including managing counterparty risk and things like that. All sorts of things that gave me insight basically into sort of some of the bank lending things. Also, not very surprised at seeing some of the stuff that's going on. Kind of funny, but not necessarily, I guess, the best job. Then I became the senior portfolio manager of relative value doing systematic fixed income within BlackRock. They like their long titles there. I basically, I was doing all of the variety of, call it, conventional quantitative finance for 15 years, and I found that I'd gotten basically fairly distant from people, I guess, and sort of like basically all I was doing was leverage, and different ways of leverage. And in the end, basically, it was just sort of carry trades and how do you sort of mask that? And basically, you're just long equities every which way, and that sort of just is the way it is. And I wanted to figure out ways of sort of how could I apply skills that I had learned from the technology, because I'd always been very involved on technology, and sort of bring those skill sets to sort of not the masses, but sort of places outside of finance, things that aren't just sort of widgets, actual people, healthcare, for example, education. And then also there was an innovation called the Transformers, basically published by Google in 2017. That was basically a revolution in AI. So I'd always been tracking what was going on in AI because of my job, and it was never honestly very good. And then basically after Transformers, it was actually like good enough, and I essentially decided I was going to pivot and be much more focused on that and less so on directly on finance. And that led me to investing in Bangladesh, because that was a good way to get sort of direct exposure. Bangladesh, actually, people don't know, has almost 200 million people, a young population, strong demographics, and also has a very strong AI community. So there's a good sort of group of younger entrepreneurial talent, and especially with sort of the change in AI, and sort of I believe in, call it, decentralized education and YouTube University. So I also, for what it's worth, also in my pivot from conventional finance, I got a degree from Stanford in AI, and because I wanted to know, and I continue to take classes at Stanford because I'm always curious what the state of the art that they're basically working on. And then it also provides an opportunity to sort of compare and contrast, particularly on the education front, what's being taught in some of these other areas, and try to make sure that the curriculums are kind of at least similar. Just because there's no reason why technology that's built in Central Asia or Bangladesh should be worse than the West. That to me is just kind of silly, especially when you look at how much is done on YouTube and Discord. I myself actually am a heavy user of Discord actually, like, for academic research and things like that. There's a lot of strong projects, also part of like the crypto space. I mean, so, and when you think about basically what is Discord basically is sort of a leveler of it's equality. for everyone, right? It's a chance for people to participate and also get their ideas noticed, and so it sort of, to me, is sort of a great to sort of bidirectional platform to find talent and to showcase talent. And sort of that's sort of, I guess, the long-winded the TLDR about me is basically did conventional finance for a while, built up tech skills, decided to figure out a way to refine the tech skills and apply the tech skills to real world problems, and have been doing the real world problems for the past 5 years, and also continue to do debt and structured product investing, still using the finance skills from before, especially as it pertains to helping founders maintain equity ownership of the company, and figuring out creative ways to help that, because I think it's usually there's good ways to sort of have alignment of founder equity and basically spending of capital.
I also have the finance background in terms of the education and the early career path. What do you think of the statement that the VCs must be successful or sometimes not successful founders of the startups?
I think that it can be a learning process to be a founder of a business. But to be honest, a lot of success of startups is mostly, or previously was determined primarily based on the funding circle, I guess, that you're part of. That was more the determining variable than the actual startup. I mean, I think that going forward, I think it's going to be very challenging for most businesses, regardless of experience. And you have to be mindful of basically, you have to think about everything almost as like a fixed income investment, where you actually have to pay back your principal at some point in time, right? So you're basically paying into a bond that eventually at some point in time needs to pay back out, or so either it needs to grow a lot, and so therefore a few months of payments pay back a few years that you paid in, or it has to basically be very steady for a reasonable length of time. That also works. I mean, I actually think that's kind of the return profile you might get in some of these other countries. But then, because then you aren't as reliant on I would call it the correlation in the global economies, right? It's basically like thinking about the exits, and how do you structure something so you aren't as reliant on external capital for your exits? Because the thing is, it's like the stock market's doing relatively well. So I think the economies are doing relatively well. It's just that the venture environment, as measured by Tiger Global being 1/10 the size of what it was, is like 1/10 of what it was. So I guess that like the venture environment grew faster than GDP, and now GDP is kind of catching up to it. GDP can grow like 10% per year for a while, which I didn't say real GDP, nominal GDP. It's still GDP, and startup valuation could do zero or go negative. I mean, I think we've seen like a good bounce also in the public sector. I think that private sector valuations are just, they might stay kind of sticky. And so basically, I think founders now have to deal with like costs. So I also have basically the venture studio. So I've been basically pushing a product, I have a few different products, one of which is basically accounting software, like merging Zoho and QuickBooks, and AI for data entry, and then some AI for analysis. Basically, just sort of things to keep things simple, and sort of just when you're thinking about sort of the units of revenue that you're going to get relative to how much things cost. I mean, inflation's a real thing. Like people basically, when you think about your employee costs, everyone I talk to would make these projections about these burn rates, but I'm like, if you think about all your input variables, and then you just like, you take your unit labor costs, let's just say you have a lot of call center employees or something like that, and they just go up like 20%. Like it seems like, oh, I'm paying them $800, now I'm paying them $1,000. Unfortunately, if you've scaled your business at a certain point in time, that adds up a lot. And you basically, you're spending more on sales just to make up for having to, for people's essentially salaries, you know. And you're not really getting anything really positive from the inflation, so the inflation is really squeezing you, you know, in a few different ways. And so people's balance sheets, I think, are under significant pressure. And I don't see the problem is, you look at the rate at which people are acquiring new ARR, that their actual growth rate, and basically, is it getting them closer or further away from profitability? And some of these companies are pretty far. And then you think about how much money they spent to get there. You think about it, like someone spends like $5 million, and now they make $1,000 a month in profit. Did that really achieve anything? I mean, like at a high level, I don't think so. You know, like it's funny, like I'm watching this show about like industrialists who started like food businesses, and like the struggle that they had, like of starting like these chains and things like that. And you're like, whoa, those are like real businesses. And then you think about the valuations that these businesses got relative to like what that they were like household names in like 3,000 grocery stores, like brick and mortar, and they were like valued at $72 million or something. And then you've got these startups with like no presence, all online, like a bunch of employees and a lot of burn. um, and then like $12,000, not $12,000 a month in revenue, but like $120,000 a month in revenue, and like 40,000 downloads, but like 500 actual customers or something like that, like order of magnitude smaller, also $72 million or something. And it's sort of like, I look at that and I'm like, wow, it's sort of strange. I'm like, I feel like as venture investors, it might just never, those valuations just might never happen again, you know, and that we're just in sort of the new normal where the valuations grow slower. So you basically, if you had previous experience in some of these things, you basically probably had your funding rounds 6 to 9 months apart potentially. Now your funding rounds are probably 15 to 18 months apart, and due diligence has gone from 3 months to 6 months. It's the change in the due diligence period, I think, is probably going to hurt people. I see that with some of my companies where they think that someone else is going to write a check, and I'm just like, no way. Like they might write a check, but it's going to take another 3 months, you know. And so basically, people have to add another 3 months of burn rate. And what happens is you are now getting uncomfortable at the end of someone's due diligence period, which then makes them decide that maybe your valuation's a little high, right? All because essentially the due diligence, just you kind of got a little uncomfortable. So it's just sort of, people have to be more meaning. But the interesting thing is, this is kind of backwards looking. So
And what do you think about the recent deals? For example, the Inflection AI of Reid Hoffman's that raised over the billion in the one round.
yeah.
Or the Mistral AI in the France, also building the LLM of the Europe. What do you think of that AI rounds?
So I think the AI rounds, I myself would say this is another instance of, I don't really know if how you could look at these businesses and think of the sum total of the revenue is going to add up to what it is. But the same way Tesla, that's never going to happen with Tesla either. I think people want to own a piece of the future, and I think that it is to some extent a FOMO thing, but I think it becomes a self-fulfilling FOMO thing in the same way that I think Chat GPT has generated for OpenAI massive amounts of actual revenue. But most of these startups in AI have really struggled to have actual revenue, because the thing with AI is most people don't know how to use AI efficiently. Like to most people, AI is like kind of a novelty, and the best uses of AI are in places that someone wouldn't even notice that AI is being used, right? So that's sort of the situation where AI is, and also AI has to be used in situations that have low fail cost, right? So like basically, like things like people pay a lot of attention to spam filtering, healthcare. Like if you get that stuff wrong, Like you can be 97% correct and get that 3% really makes a big difference. But things like customer service, honestly, that doesn't make as big of a difference. You know, that can be AI. But again, that's one of those things that people don't really notice. It's why when people expect like the biggest changes in AI are really how people do their jobs on a daily basis and understanding how to do that. But I don't think that's really what the people are thinking about when they're doing these types of investments or how the revenue is being driven. So it's basically just take anyone that basically has more or less 5,000 A100s. If you have like the capital to have 5,000 A100s, you too can be valued at $1 billion, basically for the potential for that. The only thing is that also these models themselves get outdated every 6 to 12 months. So the problem is that like the IP that exists also itself gets like, so I'm an early investor in Stability AI. They were one of the first. They were kind of the first of this wave. I would call it the new wave of unicorns, and they're basically based on open source. I don't know how they justify their valuation. I'm an investor, right? I literally don't know. Like the only way is that it's because it's expected to be so dominant in people's lives, and so you don't really know what that's worth. So that to understand how to value these things is hard because it has nothing to do with revenue. But it's really funny because everything else is so much to do with revenue at this stage. How do you have such a business that's so incongruent with everything else? Because the thing is that like parts of, so the way you make money in AI right now is to sell shovels, right?
Yep.
AI is a gold rush. Sell those shovels because the thing is the mind keeps moving. The model, like I said, the best model keeps changing, right? And the thing is, these companies that are worth $1 billion, it's not that they're worth $1 billion. They have $100 million of actual cash to be competitive in a growing market. And so that it's just they're just a big corporate there to play. And so they themselves have a reasonable amount of edge. And so check out like a company like Presight AI. So there's a company that actually has a lot of revenue. So Presight AI is like Palantir out of the GCC, and they have a $5 billion valuation or so. They have $400 million in EBITDA and an operating margin of like 50%. So they make actual money. But the thing is, they're not like producing the cutting edge AI. So that's what the thing is. It's like you get this sort of a weird thing where you have people making actual money, and then by the way, that's good real business. That is a fantastic business, but there is no one at Preset AI.
What are they doing?
Preset AI is doing simple services basically. Simple service. That's what I mean. Like AI, the AI that everyone's working on isn't necessarily AI that people actually need still. People still need simpler AI, and Presight is doing, call it the simple AI. Like before you get to, that's what I'm saying. Like people don't know how to use ChatGPT. People like use it and they go, "Oh, this thing's smart. It's smarter than me. That's great," and then they don't know what to do. Right? It's basically ChatGPT is like your own private tutor. Right? And so if you are a bad student, odds are it's probably not helpful. And unfortunately, most of the world is not a good student, especially because this is not a teacher that gives you homework. You literally, it's a blank slate and you have to ask it questions proactively. It's like Google. And so basically people that are good at Googling will be good at ChatGPT. But these people were already probably having good jobs anyway, because that was a good way of getting skills and things like that. So it hasn't really, that's what I'm saying. AI hasn't really unlocked to the masses because the masses don't yet entirely know how to get value from it. I think that basically things it'll be like things like autocorrects and write your own email. Like basically I call it lazy tools. Like lazy things that help people be lazy with their jobs. That is going to be AI that gets traction, but that's not really what people want to talk about. Like Grammarly. Grammarly is like, again, that's what people actually pay for, but it's
Yep.
not, that's not raising like Grammarly should be worth, relative to the revenue, should be worth like $25 billion, but it's not. So I don't know.
A few days ago, I have the discussion with other VC, and he mentioned that one of the great investment in the AI could be investment in the electricity, investment to the power grids, because what do you think of
So
that?
I actually have a great company for that. There's this company called Crusoe Energy. I think it is fantastic. So it's basically they're harnessing they're harnessing the flares from oil wells, and then building a data center next to it. They've had success in Texas, and they're rolling it out in KSA. I'd like to see them also roll it out in Kazakhstan, because I think data centers are actually going to be really valuable going forward. Like above and beyond, like people are going to think about data centers in a different light, and everyone is going to like as like almost like nationalist pride. So basically, the technology to have your data centers next to this sort of thing, the same way like there's a lot of data centers in Norway. People trust Norway, right? But maybe people would prefer to. I mean, I think everyone prefers to have their data centers local, if at all possible. And so having this, I think so. This technology, I'm not sure it scales, because I think they're having to, because I think it's such good technology. The idea of it is so good that everyone should be using it, and the fact that everyone isn't means it's not quite there yet. But I think like that's like I believe like merging basically like waste, because the inherent idea is it's very expensive to it's basically, think about this, it's very expensive to transport like the raw commodity, right? It's less expensive to transport electricity, and it's much less expensive to transport bits, right? Because each step basically is essentially refined goods. So in the same way, this much cotton turns into like this many amount of jeans, like so it's effectively, and then you just minimize the distance, and then think about basically what are the countries that it's best suited to be in, and then try to think that would you develop a high-tech industry near those places, because you, in the same way that like Seattle became a hub for technology for whatever reason, because that's just you build critical mass. It then turns into sort of somewhat of a cultural aspect to it, of basically you now have like a city of skilled workers placed near kind of random locations. You think about, if you think about what this actually looks like, when you actually think about, okay, we're gonna have a data center next to an oil well, and what does that, okay, who works at a data center? Do these people typically work at oil wells? Maybe. So the reason why I say Kazakhstan, well, when they were all doing Bitcoin mining, they all did. So I think it provides like an opportunity for like Kazakhstan specifically to really take the stage, and especially since it gives given Kazakhstan's central location, and especially maybe also space flight. I don't know. There's got to be different ways of leveraging, either launch the satellites from Kazakhstan that set up the ways that people can talk, or run basically all the fiber through Kazakhstan, because it's in the center of the country, a center of the universe, a center of like all the continents. I don't know. There could be different ways of spinning it, but having a whole bunch of low cost data centers is probably that to me seems like something that is like a good resource. You just need basically call it demand for
Yep.
for those things, and so you have to create basically people who need that demand, because I feel like there's surprisingly less, like people talk about all these engineers in all these places, and there's not as many as you think. And you know that because you look at like sort of the services on like the Mumbai AWS as compared to in the way, like they're not always the same. For example, they didn't have like there were, like, this is no longer the case, but for a while there, if you were doing stuff on the blockchain, there were some things that were deployed for Ethereum in the US that you couldn't use, that didn't exist in Mumbai. So if you were doing an AWS deployment, with something of your own ERC20 token, you couldn't use the AWS Mumbai cluster, and that existed for like a while. You know, like this is what I mean. We're sort of the understanding your and no one was using it, right? And no one really even noticed this, or really no one really cared. It's the same way I'm saying that, like, if you bring all this high powered AI, no one's really going to use it. So like there was this big thing where you had a big outage, and everyone talks about all this development out of India, but it didn't really exist. So that's why I'm just sort of being mindful of trying to figure out technologies and deliver them at a time period that people actually need to use them. And maybe the best use of AI right now is actually to figure out how to use old technologies, because AI was trained on all these instruction manuals that no one has read for a while. So imagine you have a piece of hardware that's like 15 years old that is servicing a phone, right? And no one there hasn't been a technician trained on this in a while, but people are still using these phones in, like, I don't know, Africa, right? So you ask the AI basically to be your technical maintenance, because it's like the only thing that actually might know how to do it anymore. I mean, these could be interesting sort of random use cases of ways to bridge in AI in creative ways to emerging markets that people might actually use it.
Peter, you mentioned that you are the investor in the Stability AI. How can you as an angel participate in that deals?
That was I use Discord. So I look for some of my deals through Discord, and I basically
Secondary market.
No, primary. I basically found Ahmad directly. So I basically found the founders. So I sourced the deal directly, and I've sourced other deals this way too, where basically you just go to the source, and I find their community page. So I was basically their first outside investor, to be honest.
Really?
Yeah. And so essentially I found their community page, and I started talking with Ahmad, and it seemed very interesting. And I basically decided I wanted to get involved. Ahmad also happens to be Bangladeshi, so there was some I guess preconceived notions, or hopeful in any case. But it was quite early actually. And my thought process behind it was, I have no idea how stability, and this is my actual thought process. There was no one else who was investing, you know. I just was like, I think this is interesting. I have no idea. I think AI is the future. And by the way, the valuation I invested at was not good. It was actually pretty bad. If the valuation was better for me, I would have invested more. He already jacked the valuation up on me pretty badly, and that was without having any external investors, with no revenue, with nothing happening.
What year was it?
So I did it a year ago. And he basically founded Stability AI roughly 18 months ago. They say it was before then, but it wasn't really doing anything. And all of the things that he was citing were different communities. It was all very confusing. Honestly, the article that they talk about, I kind of knew all those things, and I actually thought it was okay, because my view is that AI was the future, and I have no idea. When I did my due diligence on it, I had no idea what to do. I literally was like, I have no idea. I'm going to write a check. I literally said, this has failed my due diligence. I'm going to write a check. Because if it goes up, because I believe in AI is the future, I'm going to feel really, really stupid if I don't write a check. That was actually my thought process. I did a total FOMO investment. And that's why people are writing checks for I think for that same reason, I just happened to be in. And also, by the way, if you want to source deals as an angel investor, Discord is a very good way to do that. It is a very good way of leveling the playing field. It basically gets you into the feeder. Like, LinkedIn sucks. LinkedIn is a very bad way. LinkedIn basically has a lot of people mining it. Discord basically has some amount of filtration. Also, Discord has something really, really helpful: history. For anyone who is actually paying attention to this, use the history. You know why? You can join a channel for basically a project and you can look at who is talking. And then you can send in a DM and be like, hey, I'd like to get involved. By the way, if you want to get involved, that's a very good way of doing it. But also introduce yourself, say hello, and then DM someone. So you might not feel comfortable talking in these things in the beginning. That's okay. It's okay to be a lurker. However, feel free to DM these people. You'd be surprised. People will reply. For example, Ahmad. That's how I got into stability. I've had a few other projects that are basically in stealth mode that are really, really interesting tech projects, like good deep tech projects. And once you basically you find the good Discord channels from GitHub. So if you know good projects, they usually have like a social social link on their GitHub. Some maybe contact us for support or something like that. See our Discord. Jump in the project if you think it's interesting, and ask around. And this is how, if you want as an angel to get involved on something in AI and have it be potentially real. The reason I say is if you go from GitHub to Discord, that's a lot more legit than LinkedIn spam of where basically someone just says buzzword, 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 and basically just uses some graph theory that basically if you are proactive and just sort of seek it out. And a good starting point is, I'm going to boost Stability AI here a little bit, but so Stability AI is the open source, but there's this project called Eleuther AI, ELEUTHEA. Sorry, it's kind of funny. I'll send you Eleuther AI though. This is the primary open source AI community. It has about 18,000 members on it. It's very active and they're very helpful. And so if you are basically curious, like if someone basically approaches you, this is again advice for angel investors. If someone approaches you with a technology in AI and you don't really know about it, and you want to ask some people that you and get a good answer, the Eleuther AI community in Discord is a fantastic resource. You'll ask a question, and if you no one will make fun of your question. What I first recommend though is just search the history first for your question, that someone might have already answered it. By the way, they won't penalize you for that. Like it's not like some places like Reddit or whatever, they'll be like, we already answered this question, see this. People don't do that on Discord. It's most of the time. They're actually nice enough to like not say RTFM, you know. They'll actually like give you something helpful. However, try to make their life easier and look it up too. But usually that's it. And then basically you can figure out from there what the basic technology is, and then sort of if there's anything going on. Because a lot of the times, most of these AI startups, they're just wrapping Chat GPT. I mean, you could ask them things like, are they just doing prompt engineering? I mean, there's a number of different ways. And the thing is, a lot of AI startups are going to get valued. They're gonna go up, but they're not gonna have necessarily exits. So they're gonna appreciate in value a lot. You're gonna have a lot of paper money, but there's not gonna be any exits, because there's gonna be this FOMO where basically, because you've got these big startups that are at $1 billion valuation with no metrics, so it pulls all the other ones up with it. So it's very easy to be an AI startup worth $100 million. The problem is there aren't 1,000 AI engineers in the world. Like people basically just think that all these that like this amount of AI talent magically exists. There aren't enough AI engineers in the world to support an ecosystem of that many companies worth that much money. It doesn't exist, right? You can't have that many individual companies. You can have a few, but the idea that suddenly there's going to be 50 companies, each worth $200 million, and they each have their own employees that are actually good at this. The reason I say this is you can go to GitHub, you can see the contributors, you can find the number of distinct contributors to each of these projects. Then you can find the number of people who need to be employed at all these things. The math doesn't add up. And so that's what I'm saying, that like what happens is you're gonna have a startup, you invest, it's $30 million. Oh, that's great. Boom, goes up to $100 million. That's great. Now they need to go and build and expand, but there's no talent. And suddenly that's it, they're stuck. And the fact is that there was never really enough revenue in the first place to justify that. Like they would probably be okay at as a $10 million valuation, but the problem is they just were at 100. So you can't go from 100 to 10. And so that's probably what's going to happen to a lot of these AI startups is they feel really, really good. You get marked up on a lot on paper, and then basically there's no follow through.
And what do you think of the Microsoft, the Googles, of the Apples? Are they not the exit strategy for the startups?
So it depends. So if you're a localized version of some of these
Like
things,
the usual, how the usual market works. Why is that different?
Well, the problem is if you're just wrapping Chat GPT, it's not really the one they haven't. There hasn't been that much in the way of M&A thus far in that space because there really hasn't been, I guess, a need. You also have to think about what are the things that they need to buy, right? They need to buy data, and they need to buy distinct data. So you need to think about how your business is structured to do that. And if you're doing that, that's great. So you basically your KPI is essentially data, distinct data, as opposed to something else, and then essentially monetization of that. No, I mean, I think that is actually, these are potential exit strategies, but they themselves have these massive research divisions already. So for them, what they're going to need is basically the localization component. So if you're adding value in the localization component, but if you're basically just like building on top of what they already have, like if for example, if you're in Saudi Arabia and you're just delivering English off Chat GPT, which by the way is illegal, but let's just say that's what you're doing, and you're not doing Arabic, it's not like it's not a value add. Like I mean, so you basically have to be servicing because if you're just using their model as it exists and delivering what it exists, it's not really able to collect new data. So you basically have to have some better type of, call it input collection. So education actually is a great way of data collection. So basically integrating AI into like a secondary education that's taught basically in a local language is a great way because that is not data that you're going to find on the web. So like when people are thinking about what is data that they're interested in purchasing, that would be something like data that is challenging to acquire, that doesn't seem particularly, call it nefarious, as it were. Like there's things you can do with like federated learning and things like that. But it's being mindful that you can't just call yourself AI, and also that that you have to realize that if you're wrapping Chat GPT, you have to realize that a year from now Chat GPT is going to be obsolete. So if your entire business was like being a Chat GPT specialist, well, you need to go back to school a year from now. So like that's the problem, is that you have to have something that is basically model independent. So you basically your fortress in AI is your data, and then the model is something you just kind of swap, right? So the model, people think, okay, the model's at the center. The model is not at the center because the model literally changes. And if you don't have the ability to change out your model, you guaranteed you're obsolete. Just because like if you think of AI, think about AI in the model size, it's like a IQ, it's like a brain size. And so in 2017, the IQ was 4. By the way, these are correct numbers, roughly speaking. IQ is 4, somewhere between 1 and 4. The IQ in 2021 was around 10 or so, and the IQ now is around 50. And the thing is, when you think about what is the difference between 4 and 50, right? If you're interacting with something that has an IQ of 4, you will know very quickly it's not sentient. Like it might like do one thing correct and then literally can do nothing else correct. And you're like, oh, okay, that's an IQ of 4. Now an IQ 50 might actually start to fool you. Like it's actually starting to fool you, right? That's a very, very big difference. And that's basically what's happened with AI. And the problem is, if you built something that was really fancy in 2017, even it doesn't matter how fancy it is, it just can't compete with even the dumbest, worst thing that's IQ 50. It's like literally off the shelf. And actually, it is in fact, there is a thing known as zero shot learning. Basically, you had to fine tune models very aggressively, and you had all these specialist models. Basically, there was an entire industry of BERT specialization, right? That was an entire industry. Nobody talks about that anymore because that doesn't really exist anymore. It kind of does, but not really. That is still used a lot, but that's an example of sort of what to be mindful of. And so if you were doing all these, and there's a lot of startups that were doing these models, and the problem is they're IQ 4. So literally the IQ 50 does everything that the IQ 4 does, and it does it with no effort. It's zero shot, no training, no tuning, just ask it a question and there's your answer. And it is better than 55 iterations of the IQ 4. So that's where what you have to be mindful when you think of the AI investments. And by the way, those companies in 2017 and 18, they had great valuations, right? They did. There was a bunch of companies valued at 150 million dollars. Not so much anymore. So that's why I'm just saying once a tech company gets worth $1 billion, it's hard for it to go down. Like at that stage, it has so much cash, like you can just spend your way through anything. I mean, like your runway, the runway at that level is it's far, you know. Like you can only be so wasteful, you know. And that's when people start getting real wasteful. But if you only have like $5 million in the bank, because the thing is, these AI engineers cost like 500. Like the good AI engineers, if you don't have Central Asian AI engineers, like all these Silicon Valley AI engineers, they cost you like $500,000 a year. And so that's basically where you get the competitive advantage. Is you get basically AI startups with Central Asia data and Central Asia engineers. You have basically your moat of your data, and your cost basis on these things is a lot lower. And then you basically start targeting you basically just undercut all of the US institutions, you know. And that's I think how you get your sustainability. But do you have 50 of those? Not necessarily. 10 or 20? Yeah, probably.
Peter, you mentioned that your personal due diligence on the startups. Can you elaborate about more about this? How do you pick? How do you measure the startups? Not talking only about the AI startups, but in general.
Yeah, so I guess I'll start off with the easiest way to do this is I do balance sheet analysis, actually. So when I do startups, I do a lot of debt investing, and it's easy to talk about this because it's a lot more tangible. The AI one is also tangible, but not quite as tangible. So I take a look at someone's balance sheet, and I try to break it out into where basically are their costs coming from, and how much of it is associated with revenue generation, and basically what parts of that are going to scale up and down with the revenue. So I like to think about basically a company, and I imagine I'm investing in their equity. That means I want the company to grow 10x. Okay, so basically the world has changed if a company has grown 10x. So this is me putting on the philosopher hat. So I imagine basically what is the world look like basically at a company that is 10x larger? What does the world look like that a company that is 100x larger, right? So you think about it, and the reason why this is relevant is you get basically at 100x, you are now a large enough business that a global player is probably considering buying you or taking your market share. Like if you are making that much money, it is relevant for someone to actually care. Like it's basically, you can have very high operating margins at low levels of revenue because no one's incentivized to compete with you. But this operating margin is going to go down as you scale. So I basically try to figure out, that's why I say, like, literally I multiply by 10 and I multiply by 100. That gives me a rough idea of where the operating margin steps effectively look like. And then I can essentially get a kind of a rough idea of what basically forward like PEs essentially could look like. And then I can get a sense for what sort of potential upsides in the company are going to look like. Because I want to think about like in the best possible scenario, and then also how much capital they're going to have to raise to get to that situation. That's why it's also relevant to look at their balance sheet and what scales with it. Because basically, if their CAC is high, but it's non-linear, that's okay, right? So then it goes down. But if they have something like call centers or things like that, that literally you get 100 new people, you need 10 new call center employees, and it just scales linearly. So they're never really going to change their operating margins all that much. Then they're going to need basically different sources of capital, and they might need to dilute, right? So if they're basically running a negative profitable business and they're just gradually getting closer to zero, but they're still not quite there, they're going to be gradually diluting. So I can basically calculate how much money do I think someone's going to have to raise, and therefore how much am I going to get diluted? So I can guess, one, what is my level of dilution? Two, what do I think is the ending point? And I can basically do that based on their balance sheet. And I take a look at essentially what is their current costs, what are fixed costs, what are costs that scale, where are their funding sources, what else can they get from funding sources, what and like in a tech business, for example, their salary costs, what are their how much inflation are they baking in to their people, how are they going to do their longer term pricing models, how are they going to deal with like pirating, I don't know, random things like that, but basically things that get in the way of operating margin. But really it comes down to trying to figure out, I look at the actual like balance sheet math and just try to get the general ballpark of how much money do I actually think that they're going to need to get to be $1 billion valuation, if that's even possible. And then if that's not possible, can they be $100 million business that pays a 13% coupon? That works too. So I basically, because you'll figure out a way to get an exit. Because basically, if you can't grow to be $1 billion business, there's nothing wrong with being a $100 million business that makes $13 million a year, right? That's cool, right? You might get depending on your PE, like some PEs of like places are like 6, I don't know, that'd be a $100 million business. It's not as you would think with $15 million in profit, you'd have a higher valuation, but sometimes it's not the case. I don't know. But in any case, to me as an investor, that would be great. That's plenty of cash flow to basically pay you back. Because I think about basically, if there is a dividend yield on the company, what would the dividend yield be on my initial valuation? Right. So if I invested at 15 million, let's just say a $10 million valuation, and it goes to 100, and then there's a 3% dividend, then I'm getting effectively a 30% dividend on my initial money. Now there's going to be some level of dilution to get from point A to point B. And that might bring it back down to 20, 15%. But that's why I look at people's balance sheet to get an idea of like, it can be all well and good to be worth $1 billion, but if you had to dilute through 7 different rounds to get from here. This is actually why I did not invest in a few different things in Pakistan, because I thought that while they might achieve their valuations, it didn't do me any good to invest in them at a $20 million valuation, because by the time they got to be a $100 million valuation, I myself was going to have been diluted like 40%. And then potentially again. And the problem is that when you go through this dilution, the question is, what equity investor wants to step into that mess, right? Because you forever need someone else to own up to the dilution, because you're like, man, someone else, you basically just give up, like you stop funding it. You're like, I don't want to keep paying my pro rata, right? Because it doesn't actually, it's not like the equity valuation went up all that much. It went up a little bit. You're like, man, I have a 30% pro rata and it just went from 30 to 60 million. Like that kind of sucks. You know, and so that's what I mean, where like that's why you look at someone's balance sheet. I calculate basically, I try to figure out what their true yield on their books are for their deployed capital. And then basically that you back into various assumptions. And then if you don't have true yield, basically what's their moat in terms of data, or in terms of, call it community. I look then also, so that would be a financial way of doing due diligence. The other way I do due diligence is community impact. And that's basically just through I use graph theory, and this is Discord, where basically I can basically calculate effectively like page rank for Google as applied to Discord. Literally basically the same math. If you know, if one is familiar with that math.
Yep, great. I like that really quantitative approach to the due diligence. Also at the event where we met, you had a kind argument with the other VC, who is the investor into OpenAI. Do you remember that?
Yes, 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 yes.
What do you think? What's the difference between the OpenAI and the Stability AI, and what's the impact of the open source in that industry?
So I think that the biggest difference between OpenAI and Stability AI, other than OpenAI is evil. Sorry, I have to say that. Not that I have to say that. I actually, unfortunately, believe in it. Um, so the OpenAI is a centralized service, and that means it's running on their cloud servers. Also, the primary difference is OpenAI does not actually share their model endpoints. So if you are, like, let's say, a blockchain enthusiast, right? You can't verify their consensus. So they can tell you it's trained on all these things, but maybe it's not, right? They could inject all sorts of biases in that, but you could not verify it. Because what happens is these models are deterministic enough. So given the same set of data, you'll get the same set of weights with given the same set of parameters. So an open source model, you can verify the integrity of the model. So it is based on the data that they said it is based on. OpenAI, you cannot do that. So you're just kind of trusting them. So if you are a government, no offense, that's not going to work. That's just that to me just is silly. So, and I think that's sort of self-explanatory. And so, but the only thing is that the biggest difference between now that would then clearly say, oh, okay, so no one should ever use OpenAI, right? Right. The problem is that deploying open source is easier said than done. So deploying open source is very costly. So if you are trying to do an MVP or a POC, and again, as I said in the beginning, most people don't know how to use AI. It's still so new that, like, unless you're kind of spoon fed it or it's done underneath the hood, you don't really know what it is. So let alone setting up the architecture to actually make these things run on your own, and the fact that they get outdated every 6 to 12 months. So OpenAI can sit there and just swap out underneath the hood the API with ChatGPT, and you'd never notice the difference. So if you are an enterprise and AI is not your specialty, and you want to launch something tomorrow because you want to do a POC or an MVP because AI is a FOMO today, and you don't have the 6 months it might take to get up and running on open source, and that's the difference, is the open source. It's going to take a lot longer to get up and running, and it's going to take a lot more maintenance time, and there is also a chance that it just randomly stops working. So that is the problem with open source, is that sometimes the people check things in, so the versions become out of sync. So basically on T0 they're all in sync. On T 6 months from now, oh, this one went ahead, so now they're out of sync. And so if you need them to be in sync, you have to go back to this one here. So you're now using old technology just to be in sync, or you can go here and fight and figure out how to make this work. And then at some point in time, so basically like every 12 months, they go back and forth. There's like time slices where everything's kind of in sync, but it doesn't last for that long. So open source is sort of annoying. Like it sounds really good until you actually go to deploy it and you realize that, like, okay, I have to use this version, which is 7 months old. I want to use this new feature. I can't, it's out of sync. And so this is the real significant downside to running your own model. And so if you're a corporation, and again, as I go back, and as I said before, there might only be 1,000 actual AI engineers in the world. And you can do this based on, if you just look at the number of GitHub contributors, right? Like people that actually, like, you ask them, how many parameters does ChatGPT have? And they can tell you an answer. Like the number of people who can off the top of their head just actually give you an answer, you know, or tell you like what basically compare and contrast like Google versus, like, there's not that many people. And so sorry, I'm going into an unnecessary diatribe. In any case, Sorry, I lost my train of thought. There's not that many AI engineers though. So,
All right, let's speak a bit about the AI alignment. There's like two camps in the world. The one that support the, for example, Mark Andreessen latest essay that AI will save the world, or the other side with some AI engineers, researchers like maybe Yezer Yudkovsky, who's on every interview he says that the AI is like has um, the big danger for the humanity. Just generally speaking, what do you think of that?
I think AI is a big danger to humanity. I think, however, humanity is also a big danger to humanity.
Yep.
So,
Yeah.
and crossing the street is also a big danger to yourself if there's a truck coming. So, everything can be a danger to humanity. AI is no different, and there are ways to police it. I mean, I think AI already is pretty advanced. The fact is, though, that like the idea that AI, you're going to wake up one day and Skynet's going to exist and all of that stuff. Like the fact is, you can just turn the power off. Like AI, like if you think about the way AI works and how it actually like does all this stuff, it has a set of model weights, right? It's like RAM. You turn it off, boom, the weights are back to zero, right? Like it's not like in control of its own devices. Like I was speaking with someone and they were worried. They're like, how do I know that this AI isn't talking to another AI? I was like, well, there's things called monitoring, and you can actually kind of see that. And it's kind of obvious. And no, that's not actually going to happen. I was like, it's not sent. AI is not actually sentient. However, I think that AGI, so basically in IQ terms, if you go back to the fact that I think that AI is at an IQ of a 50, right? IQ of 100 is not very far away. So I believe that AI will have human level of intelligence. I actually, for what it's worth, I decided to test this out, and may I not get kicked out for this. I designed a pipeline, and I had AI take an exam in AI, and it beat the Stanford students, for what it's worth, on an exam on AI. I thought that was funny. I thought it was kind of funny that the AI beat the students in AI. Kind of violations of some honor code, but I was like, hey, it's a class in AI. I also think that's kind of like a final project, I guess, of sorts. But the fact is that, as determined by people grading my test, the answers that the AI gave for questions about AI were better than the average master's student at Stanford. So that's the state of AI. That's pretty good. That's kind of scary if you think about it. So basically, could AI design its own system? Absolutely, right? However, if you think about what it took to basically get in the process that's such that it was producing these results, it's not just randomly going to happen. Like there's going to be a human being that like hits the on button, you know. And the fact, and in the same way, like there's been 12,000 nuclear weapons in the world for the past 50 years, and yet still somehow no one has actually hit the on button. By the way, let's knock on wood and hope that doesn't change anytime soon. But again, like that's what I'm saying, that the capabilities for these things can exist, probably do exist, but they're not necessarily going to be unleashed. The only thing that has me concerned is, unlike a nuclear weapon, AI is something that can be used and no one would notice. So the most dangerous part about AI is that you can use AI and no one would notice. In the same way, again, I'll just use it was my hypothetical test case. Did anyone notice that I used AI to take the exam? No. You know, and so like the amount, basically the level of like deep fakes and propaganda, social media, all of those things are going to be taken to an entirely new level of bad. But I view it a little differently. It's sort of just a different level of creation, right? it was sort of deep fake is sort of an arbitrary thing, right? Now we basically think about deep fakes as artistry. Think about now that movies that basically deep fake was just a movie, right? Someone just got really good. So now let's just say we want to come up with a movie. So like you go again, Saudi Arabia, you go to or Kazakhstan, you go there. Honestly, the movies kind of suck. They aren't very good. Well, imagine if you could basically have something trained on Western media, just the production quality, literally just the production quality, but basically rip a different story. So you're basically doing like stable diffusion style transfer, and you're literally saying, I want to take like this movie style, but I want to use this content of my culture, and I want a movie that looks nice, right? That is actually something that now that is technically speaking a deep fake, right? However, I think that is like a cultural cool. That's what I mean. Like that is actually, I think, a cool use of AI. Whereas like that to me is actually where AI goes in the future. And you think about the components of that, they all sound like they could be nefarious, but we think about what does that actually add up to look like? It looks like movies in a different culture with production quality of Hollywood. And that's like, that to me is what AGI looks like in 5 to 10 years. And I think that's actually a pretty cool outcome. And so that's sort of like, I would like, and that's sort of there's a lot of like, there's funky use cases in there, but it's good technology. And so, and then also that produces enough, like call it positive GDP, you know? So then basically people aren't incentivized to do deep fakes of whatever. And also again, if someone's going to do a deep fake, why should it like deep fakes of pornography? That's a really bad use of people's time. You know, why don't people like do like that's what they do a deep fake and make it like cool artwork?
You have a strong finance background. What do you think of the use of AI in the finance? I think the uh, finance was the one of the first use cases for the AI, for the machine learning. And nowadays, when I read and learn about the quantum computing, the expert says that the first use case for the quantum computers also will be in the finance. What do you think of in that perspective?
I think finance is actually ends up being really simple. In the end, finance can basically be solved for the source of money in finance is basically bid offer or leverage and like carry. And so the use of I think like it basically, I'm saying that active portfolio management doesn't work most of
Yep.
the time with even, and so AI doesn't really change that fact. Um, I think that there are portions that it will change. Part of the problem is the data. So for AI to work, um, so basically you have to think about the amount of data that you need. So this is, by the way, we'll go back to some math here. So um, think about it in terms of number of data points. So to get truly powerful AI, you need basically 20 billion parameters or so. So basically in 2017, state of the art was 100 million. Before that, you had basically 10 to 15 million. Million with an M. Now it's billion with a B. So factor 1,000 bigger. So if you're using AI, but your model still only has 15 million parameters, you aren't using AI. This is my example of you. This is like IQ 4, right? You're bringing a knife to a gunfight. They're going to shoot you. You're going to lose. It doesn't matter how good you are with the knife. You're going to lose. That's just going to be that. So the problem is that the reason why people are using these models that have basically 15 million parameters is that they don't have enough data. So you need number of data points equal to 20 times the number of parameters. By the way, for anyone listening and paying attention, that is actually a true fact. So if you ask someone how many parameters is their model, and then you ask them how many distinct data points do they have feeding it in, and you realize that you need a lot of data. So if you need 20 billion data points, you need whatever 400 billion distinct data points. And if you have 400 billion distinct data points, now you could do it with 20, but you kind of need 400. But that's at least the order of magnitude of what you need. And the problem is that doesn't exist. The reason is in stock data, you have multicollinearity. And essentially, you end up, when you clean that out, you basically get a whole bunch of sparse matrices. And so because once you basically remove noise and multicollinearity and basically sparse matrices, the problem is, like, what people do is they say, okay, I need 20 billion pieces of data. Cool. Let me take the S&P 500. Okay, cool. Then let me take the S&P 500 plus gold. Cool. Let me take the S&P 500 plus crude. Now what they think they've done, now you say, okay, cool. Now I have like 1,600 different things or whatever, some large number. Actually, really, you've done nothing. You've literally done nothing. And so when you basically, so this was my job at BlackRock, was to decompose everyone's strategies into essentially their alphas and their components. And basically that tells you, when you decompose it, basically the alphas and the betas, and the amount of times decisions are actually made on the alphas, the number basically of bets, right? You think about the number of bets that is being made, and the number of bets being made in some of these things would only be like 20 or like 50. And that's just not enough to utilize the power of AI. So now utilizing the power of AI isn't necessarily going to be to analyze prices. It could be to analyze, say, sentiment. And it's more the natural language processing. But that's basically how AI has been always used in finance, is essentially for sentiment analysis. That is typically sentiment analysis and reading 10Ks, natural language processing. That has historically been how it's used. And it's also used for technical trading, for neural networks, because basically you can fit nonlinear functions. And again, but that's basically effectively a type of supervised learning. So if I'm trying to fit a nonlinear function and I'm using AI to fit a nonlinear function, the AI is getting more and more creative. All that means is I'm getting more and more overfit. So basically, better AI means I fit things better in sample. Better AI just means I'm better at data mining, right? But the end outcome is still the same, right? You're still data mining. So if you were already good at data mining, it's not necessarily going to produce better or different strategies. They might be more dynamic, but it's not changing the paradigm necessarily. So I don't think AI has changed the paradigm of trading and investing yet. And I also think a big component of that is that no one's really tried. Most people I speak to involved at BlackRock or D. Shaw or other places like that, they don't work with transformer models. They work with ChatGPT. It's like ChatGPT. Some of them are training their own models. There are people at Citadel and SAC that do that have their own things. But again, relative to what you would expect, it's not as prevalent, because quite frankly, it just doesn't work as well. I mean, at the end of the day, carry trades and being long S&P 500 is the best strategy. That's just, it's hard to beat that. Because the fact is, when you think about a strategy, you basically think about it this: if the S&P 500 goes down 20%, do you think you lose money? And if the answer is yes, then you're just long the S&P 500 and you just dressed it up differently. That's the problem, because the liquidity of the S&P 500 is just so much better. And when you basically transaction cost adjust everyone else's alpha, you realize that it disappears real quick. And the problem is that until AI, basically transaction cost kills intelligence. So transaction cost kills a smart person. Transaction costs also kill AI. So basically, until you can figure out a way to have the AI managing the transaction costs, and that's not an AI thing to do. So basically, AI is being used to monitor bid-ask spreads. That's probably one thing that it's being used for. But it's look at the advances of, for example, the automated market making in crypto, and notice how there is nothing to do with AI in there. By the way, actually quite innovative. If that's actually some of the math that they came up with for automated market making is quite interesting.
How does it work?
It's basically that you essentially are willing to trade exponential units of something for something else, but then they had basically bands. You basically trade something for 1/k effectively. It's basically just an inverted ratio of these things. And that's basically how it works at a high level. And then they have different ways of targeting it. I mean, it ends up being very simple in its elegancy, and that actually this is what supported the bulk of the decentralized things. But what it does is, depending on, so if you have only like one person and they need basically the band of the entire liquidity. The reason is, so basically they started subdividing it. So as a trader, what you do is you look for where the subdivisions are and you basically trigger a breach. So basically they make money here. So what you do is you move it here and suddenly, boom, they blow up. So basically, if you can understand where a market maker has set up their thresholds, so that was the flaw. And by the way, this is like, market making is always the same. It doesn't matter how good technology is. There is always a trade-off somewhere that someone has made, that if you step over that bound, the system is turned off and you've triggered a stop. So basically, all systems basically have what is essentially this non-economic thing. And effectively, it's like it's like an adversary. It's like generative AI, basically. You have an adversary and you have a discriminator. And so people basically, you have bots hunting for these things and people defending against them. And they go back and forth. And you get this, you get this in a lot of different things. But if you think about that as sort of the generative AI, I think that's where you get something that actually could be cool aspects of it. Again, the amount of research being done in this field is fairly minimal. They're still basically understanding using portfolio frontiers, and that you can do optimizations and optimization constraints. Like put it this way, that like when I was at BlackRock, we were using technology from like 1997, and people thought that was advanced. It's part of the reason I left BlackRock, is like I was like, look, man, I was like, I want to use technology from 2020. I don't want to use technology from 2000. Like it gets, and so the average level of technology being used by most finance firms is probably 10 years old, if not more. Now, there's going to be some firms that run basically significantly more advanced finance. And again, I say Discord. You'll actually, if people want to actually take a look at this, check out the Hummingbot Discord, because there's people in there talking about trading strategies and the technology and trading strategies, and it's applied to crypto, so it should be accessible to anyone. And they're more legit, like the pump and dump Wall Street scams and bets, whatever. Like honestly, who cares? Like that's not really particularly interesting. If you go to Hummingbot, these are people running market making bots and telling you how they're making money running their market making bots, how much money they're making on the bot relative to how much money they're making on liquidity, basically getting, sometimes you get basically paid by treasury services. Like again, basically when you make money as a trader, you make money because someone is paying you to market make, or you're getting paid to like for meter to sell vol or something like that. And so it's just, it's a helpful resource if people want to check out something concrete. But in terms of AI applied to finance, again, it's still mostly on the equity side, and a little bit of it is done on the technical side. But people are pretty simple. Like you'd think, for example, you would want to use technical analysis, where you basically, instead of doing like candlestick analysis or things like that, you just feed it through stock charts. And there has been some research on that, but it's actually been pretty minimal. And the models that they've run it on are pretty small. It doesn't appear that people have really used any significant hardware. So I think if people are listening and you have ideas on AI and finance, it's actually a pretty good opportunity. And actually, feel free to reach out. I'd love to talk more about different ways of applying it. I think that I think there's definitely room in the space for algorithms, just because I think that, quite frankly, the people who are managing money have actually had reasonable success on their 10 or 15-year-old algorithms. And I think that they don't need to use the new technology. The new technology is between 100 and 1,000 times better. You just have to figure out what is the appropriate data. Like basically the technology is good enough now that now you have to figure out what is the data. So how do you figure out what is data that fits the technology? How do you think about a big enough data problem? And if you can think about a big enough data problem, then it's a good place to use AI.
You mentioned in person in the podcast a few times that there's not enough qualified AI engineers in the world. Do you have some kind of advice, or you mentioned that it's one of your mission to build grow the new generation of the AI engineers? Am I right?
Yes. Yes. So my advice is to try to use the AI, but also try to at least spend a little bit of time understanding and reading through the papers, at least a little bit, a few times. Like you need to understand at the very least the idea of like memory footprints on these things, and really like it's not just like you want to the AI. There's AI engineers and sort of call it AI users. There's like AI power users. The AI engineer isn't the same. Where we're like basically as an AI engineer, you need to figure out how much VRAM you are going to need to use for your models, and then also how much power you're going to need to use to run those things. So you have, if you can understand all of those things, then you can be a good AI engineer. You know, because the problem is like if you don't actually understand those things, you start doing things and you make assumptions that are just like not possible, right? And you it becomes difficult for you to basically be kind of a standalone. Like you need to have the ability to build and run your own infrastructure. Now you don't actually want to do that in the long run, but you need the ability to do that, because then you can diagnose problems like things like you need familiarity with weights and biases, for example. So actually, that's probably a good project for most people. Set up a model and then basically have its output on weights and biases, and then show people the model's output as it's training, and have a model that takes 7 days to train, and go on a job interview and show people on day 4 that it's been running for 4 days. By the way, uptime, 4 days is actually, that's actually like a thing. And then people should see basically your improvement charts and all that stuff. Like if you want to have an effective job interview, the most effective job interview is not a GitHub. Most effective job interview is something like live that is working. You know, a GitHub, someone reads through and they go through your code, they say, cool, that's like everybody else's, that's great, that's cool, number of commits, that's whatever. Show a weights and biases thing, that's like live interaction. Or have a prompt where someone can interact with your model. One of the things I like doing is I basically set up a simple Discord bot interface to some of my NLP models, so someone can basically DM the bot or go into the channel and type in the bot, and the bot will basically access the model. And that way I can give a demo of my technology live, and I can switch which model is basically being demoed. But sort of simple enough front ends to demo your product. But that basically is how you get to be more of sort of the AI engineer, you know, sort of delivering the solution, you know, and not just like typing stuff into Chat GPT prompt. Like that's cool, but not when you're actually going to like run a business, that anyone can do that, right? It's the skill of like I call it ML ops. That is the skill that you want to learn. That is the skill that differentiates you. Like also, if someone can basically understand the difference of like data types, like why are people now going into 8 bits? The reason why 8-bit computation is important is because of phones. Because you can't run, we go back to VRAM, right? The VRAM requirement of running inference on these new models is very high. So you'll never be able to run these models in offline mode on a cell phone unless you use 8-bit computing, which, by the way, there are startups that are doing this. Also, I guess to people that are listening, you might not also hear this. there's a lot of really good resources on AI published by Yandex. They have some tutorials that I think are particularly good. I think that they're actually more difficult. I think that the ones published by Coursera and Deep Learning, they've been watered down a little bit, and I think the Yandex ones are not as watered down, but they're all quite good. But basically, always remember, how do I calculate the VRAM and actually number of parameters? Because then it makes sure that you're not like hand waving your way through stuff, and you actually, it's like when you're doing computer science, the way you make sure your things add up is you basically do matrix math and you just do dimensions. And right, dimensions can only go a certain way. And if you have done something incorrectly, you realize you're multiplying something and the dimensions of the matrix cannot multiply. It's not possible, in which case you realize you did something wrong beforehand. So that's why it's basically knowing the hardware and sort of how the matrix math basically unfolds underneath. Make sure that you don't make mistakes, because otherwise you could basically burn a whole lot of time on model computation time when you could have solved that. But in any case, those are sort of my sort of recommendations for people when trying to become AI engineers, and I'm happy to send some resources to people who are interested.
All right then. Thanks a lot, Peter, for the conversation, for the practical tips on the Discord channels or due diligence process. Thanks for your time. I will definitely listen to our podcast once again.
Thank you. Thank you so much. Sorry if I talked a bit much there. If anyone needs to contact me or follow up on anything in particular, I'm always happy to talk further. I'm always looking to talk to interested people, and especially as some of this stuff can be little complicated or at least fun to talk about. So I'm always looking forward to talking with more people about it.
Yes, thanks everyone for listening. We'll tag Peter on every social medias where the podcast will be posted, so you also could connect to Peter.